Hey traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for October 24th, 2021. I hope you guys are having a great weekend. We're going to talk today about the price action from this last week. It's really important, some of the levels that were hit and some of the reversals we're seeing, and what could transpire into the following week. So make sure you guys stick around. But before I get into that, I have to mention, if you haven't tried out ForexAnalytix, it's $1 for 10 days. Try it out. When you do that, make sure you download the mobile app, which, by the way, we are redoing. We've been spending the last 6 months rewriting, putting it in a new code, updating the code, because the app's been out for, I don't know, about 4 years. Not a lot of changes as far as changes for the app itself. It's going to look very similar, but there's some new features and tweaks that we've made, and obviously updated all the code. So that's always included with the price. Just want to let you guys know, if you have the current app right now, make sure you download it and make sure you have the most current one. New one should be coming out in the next couple of months or next couple of weeks. I hope. But also, you get when you're trying out ForexAnalytix, remember it's only $1 for 10 days. You get to try out the premium version. In the at the end of your trial period, if you decide to go with the light version, which is only $19 a month, you still get the live webinars that we broadcast throughout the course of the day, the private webinars for ForexAnalytix customers. You also still get the mobile app, so you get those notifications when we update analysis. You get some of the news events that come out, some new charts, some new setups. So make sure you download that app, because you still have a lot of features even with the light version if you decide not to stay with the premium version and have the chat room. So anyway, I just want to let you guys know that. Make sure you take advantage of it. If you missed the pricing discounts from the last couple of weeks, well, don't worry, we'll probably have a new offer at the end of this year, the beginning of the next year, something like that. So but for now, you can go take a trial. All right, so let's talk about the price action this last week and the importance of what happened. I'm going to start off with going over to the S&P, because you can't ignore the fact that we are at the highs. We have this inverted head and shoulder pattern that still has the ability to reach to 4,600. If you know me and you know how I read charts, you know that I look at head and shoulder patterns not as continuation patterns, because head and shoulder patterns by default and by definition are actually reversal patterns after a prolonged trend. So when you have a prolonged trend going higher, in this case, and you see an inverted head and shoulder pattern, I tend not to play that move. Actually, I tend to play the opposite, which would be a reversal. So in the event that the S&P gets up to 4,600 or 4,625, I would actually be looking for a short counter trend for a reversal. But that's just me, and that's how I play them. Doesn't mean that that's necessarily the right way. It's just, by the book. It's like, if you ever play blackjack, right? There are people that will hit on 16. And then there's people that won't. I don't. But there are people that do. And sometimes they do it, and you're sitting at the table and you're like, what? And then they make money and you're like, huh, okay. You got lucky. Same type of thing when you're dealing with head and shoulder patterns, in my opinion. And I know a lot of you can relate to what I just said. All right, so let's delete that. And but one of the things I have to point out here is the relative strength. Look at the relative strength on the daily chart. It is divergent, right? Also notice that we have matched the highs. So Monday is going to be really important, because just looking at the candles, and let me pull up a view of the cash market. That is as you can see it right there, that's a spinning top. And if there's a black candle, or in our case, we call them white and black, and the reason why is because before you had colors and charts, they were white or black, but now we have green, in this case, blue, red, whatever color. But if you get it like a down candle, which would be a red candle or a black candle, Here, that would be an evening star formation. So just keep that in mind, because a lot of people say, oh, well, look, we got to sell off on Monday, so it's turnaround Tuesday, then you want to buy it. That could actually catch traders off guard, because if we do have a double top and false breakout, and then we have a black candle, which is, a bearish reversal, evening star type of formation, the natural tendency of you or most traders is going to be turnaround Tuesday, I'm going to get long. But getting long in the face of an evening star formation would be a little dangerous. So just think about that. Obviously, if we start the weekend off on Monday and the markets are up, that's a different story. Then we got a breakout, and that's what bulls will be looking for going into this next week, technically. All right, now why is all this important? Well, a lot of this is important, what I'm talking about, because I want to take you over to yields really quick, and I want to take you over to the 10-year. We had a really big reversal, okay, and yields have come off, and here, let's go over to the 10-year. Here's the bond market, right? Bonds actually bounced, but I still think that the bond market's in a bearish wedge pattern, which points lower, okay? I think it still points lower, but we could go just a little bit higher, make everybody believe that yields are going to come back down again, because here's your this is a CFD of a 10-year, but you can see it's kind of probing resistance. We all know that this high in March is really important. If we break out above that, that's when the market's really going to take notice, in my opinion. Okay, we start break, and we've talked about this in nauseum on the free F.A.C.E webinars. If you guys don't know how to get to the free F.A.C.E webinars, click the link below. You can register. It is free. It's every morning. And we have, probably roughly, give or take, 1,000 to 1,500 traders that are there every day, watching through the webinar, through YouTube Live, through, and so it's a nice community, because we also bring in a lot of great guests for you to hear from. People that you might see on CNBC or Bloomberg, or just other experts in the area, technicians. Dale Pinkert does such a great job being a host and bringing in new people for you guys to listen to all the time. So anyway, the reason why I'm mentioning all this is because we have talked about the yields in like I said, in nauseam, and about that breakout above the April, March, April levels are going to be pretty big, and the market's probably going to take notice. Now, why is this all very important? Because what we saw last week is we saw a big reversal in the dollar yen at the end of the week. Now, I am short, personally, I'm short some New Zealand yen. So I'm going to talk about, I can talk about that position here in a second, but I want to talk about the importance of the reversal and look at the weekly candle. So this is the weekly candle, the dollar yen, right? And we were thinking, oh man, if we get above 115, that's going to be pretty bullish. Then we'd be challenging some of these longer term, descending trend lines up around 118. I brought in Mark Chandler from Bannockburn Global Forex. Talked to him on the Trader Summit site. By the way, if you guys want to know a place, tradersummit.net. This is what it looks like. Some of the I do most of the interviews here, and you can see all these video interviews, and there's so many new ones every day. If you just go over to where it says breaking views, these are all the most recent videos and interviews and blog posts from all of these really talented market individuals, whether they're analysts, traders, legendary futures traders. They're all right here. But I brought in Mark Chandler, and he was talking this last week about the dollar yen really just moving to a new range. We moved up like a level in the range. When we'd been trading before between let's just call it 105 to 108, and then we've been in the 108 to 112. Now we're in the 112 to 115 range. And so with that weekly reversal that you're seeing in the yen up here, you can see other yen pairs are starting to move lower as well. The euro yen just completed an AB equals CD move, has a little head and shoulder pattern right there. Look at this, the guppy You know, we came up to the 127% extension. We had a wedge, we had a reversal. The Aussie yen double top, false breakout, then a reversal. We get below 84. It's going to get ugly there. Kiwi yen reversal at the 261% extension. This was the exact same setup from. You guys just heard what I said about the S&P, right? I said, hey, S&P, I don't play them on the inverted head and shoulder patterns. This is the exact same setup, guys, just so you can see it here. I told you just, 10 minutes ago? I don't play this inverted head and shoulder pattern, but what I would do is play this reversal, right? I would short it somewhere around here in the S&P. The exact same setup happened in the New Zealand yen, right? The New Zealand yen had an inverted head and shoulder pattern, extended uptrend, and I said, all right, when it gets up and it finishes, I'm going to short it. So I shorted it at 82.10, I think it was my initial entry. And it went as high as 82.40 to the 261% Fibonacci extension. I think it's going to drop back to 80, and at 80 I can make a decision whether I want to close out my short position or play it on the long side to resume the upward trend. And that's the way I play those, just like that. And you can see how I did it here in that pair. The reason why I bring all this up is because these yen pairs actually still look a little heavy. So if they do, that probably means that yields are going to come down. One of the strongest correlations in the market right now. Now, correlation is not causation, as you all know. Just because two assets tend to move together in tandem doesn't mean that's going to happen all the time, and it doesn't mean that if one's happening, you have to do the other. But there is a stronger probability that when the yen pairs start to move down, that yields will drop a little bit. And if yields drop a little bit, I'm not sure how stocks are going to react, but I think that they might trade a little heavier because yields, or the market's really sensitive to yields. It seems like when yields go down, the stock market starts to pull back. But if they break out, the stock market might pull back too. And I know what you're thinking. Oh, Blake, that means that no matter what yields do, the stock market's going to go down. The stock market right now, I think, is priced to perfection. So yields, where they're at currently, around that 170 on the 10-year, the market's comfortable with it, but it's not going to be too comfortable. It's going to start to get uncomfortable if we get above 180, maybe closer to 2% on the 10-year. But if yields start falling, a lot of traders believe that from current levels, that means the economy is slowing, and maybe maybe because the earnings are so bad, yields are going to start coming down, and then we start to see stocks come down as well. So just a few things to talk to think about as we go into next week. Now, before I go into the dollar index, and I want to talk a little bit about the dollar index and the importance, the role that we have here. But before I do that, let's just mention a couple of things. I want to talk about what's happening this next week on the economic calendar. But I also have to say this. It's Saturday here. And if you like these videos, they're free. We've been doing them for you for the week ahead videos for the last 4 or 5 years. If you like them, please give us a thumbs up if you're watching us on YouTube. Subscribe to the channel so you don't miss any of our content that we do for free throughout the course of the week. You'll get notified when new F.A.C.E webinars are released, and it's free to subscribe. It's free to give us a thumbs up. And if you have any comments regarding some of my analysis, then jump in the comment section. It helps the YouTube algorithms. Every time you comment, it helps us. Even if it's a bad comment, you go, Blake, I don't agree with your dollar index theory. Great, thanks. We appreciate it, because then we can come back and we can communicate with you that way, but also helps the YouTube algorithm. So thank you very much. Now, let's talk about this next week. So this next week, we do have the Bank of Canada. Now, the dollar Canadian has been trading heavy, but crude oil has also been trading very bullish. And I'm going to say this really quick. With crude above 80, 81, you can't be bearish crude. Just give you a quick view of crude, right? It's in a nice, strong, upward bullish channel. But we do have the Bank of Canada this next week, and the dollar Canadian's trying to find some support down here. I'm developing a little, rounded bottom after a little false breakdown this week below 123. Some of you know I was trading it on the long side just below 123. I think Thursday night in Asia I bought it. But, if crude starts to pull back, the dollar Canadian might be due for a snapback. We get back above 124.20. That's going to be a kind of a bullish sign for the dollar Canadian. But on Wednesday morning, we have the BOC. And even though they're not expected to move on rates, we got to see if they're turning more hawkish. If they are, then the dollar Canadian may stay suppressed. That's something that's happening this next week. That's a big deal. What else is happening that's a big deal is going to be the ECB, right? And that's why I want to turn your attention to not just the euro, which I believe is in this upward, this ascending channel, but we're capped by previous supports acting as current resistance. It's capped the currency pair all week. And I want to let you know one of our team members, Ryan Littlestone, will be joining me for an interview about the ECB and what to expect this Thursday. So make sure you're subscribed, or not subscribed. This is free. Tradersummit.net. Make sure that you're following them on Twitter right here, right? Twitter. Make sure you're following them on Twitter, and then this way you can hear Ryan's outlook on the ECB this week. It's going to be a big one, and he's paying very close attention to what's happening there. But that's why I want to take you over to the dollar index, because the dollar index is actually holding up very well. And this is the point I wanted to make. The dollar index, if you look at the weekly chart, let me just, zoom out. This is, multiple years, right? We sold off pretty aggressively following the COVID lockdown. We've bounced right to the 38% retracement. That's holding us. So that, as long as we stay below 94.50, bears are going to start targeting, or are still targeting 80, 81, right? But if we get back above 94.50, or let's just call it 95, and you can see here, there's a 200-week moving average, right? But we're well above the 200-day moving average. If we break above 94, I'm looking at 95, but 94.70 is really the breakout point, because this is the breakdown point right here. We get above 94.70, then that's bullish. Now, why am I so focused on this level? Because the 38% retracement determines, in my opinion, whether we're going to be bearish in the dollar moving forward, or we go into more of a range environment where the dollar is just bouncing around between 100, or, this is 103, but, 100 and 90. And remember, don't forget, at the beginning of this year, the trade across the board from every bank was bearish dollars. Wouldn't it be, and this is every analyst in every major bank. I don't think there was one that was not bearish the dollar. Correct me if I'm wrong. And I've asked people to do it, and no one's come at me with any research that they've seen. Which, by the way, at that time, I read pretty much every major bank's analysis, end of year analysis going into 2021, and I don't recall one saying that the dollar is going to go higher. Not one. All right. What I'm trying to explain to you is the majority were bearish the dollar. Wouldn't it be funny if we ended the year at the highs of the year in the dollar? And that will give you guys something to think about when you're reading bank analysis for the rest of your financial markets career. It's different when you trade. Analysis, you can put theories in play and write stuff and, be paid, $250,000 a year, $500,000 a year plus bonuses at some, $1 million, whatever they get paid, and get bonuses and being an analyst and not watch price action and not be trading the markets. It's easy just to sit up on your perch and make predictions. But the fact of the matter is, price action is telling us that the risk at this point in time is the dollar actually breaks higher. and we close the year at the highs of the year. All right. Or, yeah, I mean, 2021, I mean, we could end up closing around 96, 97 by the end of the year, maybe even higher, depending on what happens. So anyway, just something to think about. Guys and gals, if you've enjoyed this video, please give us a thumbs up. Please subscribe to the channel. And please, if anything, give your family and friends a hug. Appreciate every day that you're with them. And I want to thank you for spending your time with me today. My name is Blake Morrow with ForexAnalytix. I'll see you guys Monday on the F.A.C.E webinar. Have a great weekend.